In this video, traders, we're going to look at some of the ETFs that have exposure to airlines. Stick around. Hey guys, warm welcome to you. Thank you for joining me. All right, so airlines, super popular. At the moment when I'm filming this, by the way, airlines have been hammered due to the coronavirus. Maybe you're watching this at another time. Maybe you want to look at airlines, short airlines, long airlines, whatever it is. You want to get exposure to the airlines. So what we're going to look at is some of the main ETFs that have exposure to airlines. So rather than going to the individual airline, having a potentially binary risk of maybe one going bust or one having some kind of outlandish news that goes against you if you're short or if you're long, the ETF dampens that out a little bit. Now, some of these ETFs are more airline focused than others, but again, you might want to have just a portion of your exposure to airlines. Maybe you want to have more exposure to other transport. So what I'm going to do is, guys, hit the screens in a moment and look at some of the ETFs that do have exposure to airlines. So let's go. All right, guys, so I've got four main ones for you. The first one I've got for you is XTN. Now, XTN is it's kind of a transportation ETF, if you like. I'm going to look at this website here that shows you some of the holdings and some of the percentage differences. So airlines have almost a 22% exposure as the sector. Most of it is the ground freight, 46% on that. Air freight, so you can kind of put them two together if you think the air travel generally, whether it's passenger travel or freight. And then you've got some other bits and pieces like internet services, transportation, marine freight and logistics. And there's some of the exposures here. Now, when you're looking at ETFs, guys, one thing you've got to be careful of, in my opinion, and listen, if you want to really dig into ETFs for longer term investment, then, please do your own homework for stuff. But one thing you've got to be careful of is that you're not really overweight one or the other, because the danger you have is that if you're really overweight, I've seen ETFs where they've got 80% exposure to one. You're basically just trading that stock and you're paying for the privilege. Because don't forget, there's an expense ratio that goes with these. This one is 0.35%, by the way. But, you're paying for the privilege of just trading a stock, and they've got a couple of others as a token gesture. So it's nice to have a good mix and make sure that all the holdings are anything you want. So XTN, let's have a look at the chart on this at the moment. It's pulled back, obviously hit by the coronavirus and pulling back. And again, it is what it is. Reasonably liquid by the look of it, decent amount of volatility, decent amount of volume, and something to consider. But definitely do your own research on these things. Definitely see if it has the exposure that you want and has the constituents that you want. I notice Uber's in there as well, so there's obviously got some transportation going on. Right, next one I've got for you is FTXR. Now this has got the most, not the most exposure to airlines of the ETS, but more than the last one, 31%, and you've got about 30% of ground freight, and then you've got a mixture of truck manufacturing, auto, tyres, etc. So some of the constituents in this one, GM, a bit of Tesla, a bit of JetBlue, a bit of Delta. So you've got some exposure there to airlines that are reasonable kind of weighting. And let's have a look at the chart on this, FTXR. Again, depending on when you're watching this video, guys, the chart may be completely different. You've got to watch out a little bit for this lack of volume, and immediately it stands out to me this is probably something that's not that useful to trading. Yes, it's been quite active recently, but that's probably only because of the situation we have with the coronavirus. When I'm filming this, normal conditions, looks like there's not a lot of volume. Let's see exactly what's going on with this. Expense ratio 0.6, so pretty hefty, and somewhere along here we'll be able to see how much is in the fund. Also, it's 25 billion. That's not too bad. And also one thing to check, guys, is how much volume is done with this. There you go, average share volume, that's really low. When you look at XTN, the average share volume is, where were we? Much higher. Daily volume done 2.87 million, 62,000. Again, we're not talking spiders here, not talking queues, but something to be aware of. If you're buying anything like this, you want to be able to get in and out of it. So anyway, that's FTXR. Maybe that fits your criteria a little bit better. Then what I've got for you guys is IYT. So this one's a lot more liquid. Look at this one, IYT. Let's have a look at the chart on here. Now again, this is and again, you can eyeball the chart and go straight away. Look at the difference between the gaps on this. Same kind of structure, guys, changed our chart pattern, but let's have a look and see what's in this thing. So IYT has a much more exposure to the ground freight and logistics. There is some airlines in there, but again, if you wanted that exposure to some airlines but didn't want full exposure, maybe this is the kind of thing you can look at. And you can see the weightings here are a little bit more skewed to these kind of bits and pieces. We've got some FedEx in there, you've got some UPS, and again, these are the top weightings, 80%, showing you here maybe you want some more exposure to airlines. But from a liquidity perspective, expense ratio really reasonably low on that. From a liquidity perspective, 250,000 shares a day, that's pretty decent. That's going to really be able to soak up anything you're after. And one final thing, guys, we'll look at the Jets one in a moment, which is much more airline specific. But one final thing to note when I think about it is with the ETFs, be very mindful about some of the small print, because we know some of the ETFs, like XIV specifically, when it went to zero, that was game over and the thing went completely bust. Watch out for the expense ratio. Be cautious about holding ETFs for the long term. All these things are well worth thinking about before you pull the trigger on ETF. Okay, so this is the one which I think is the biggest exposure to airlines specifically. This is called Jets. We have US exposure, UK exposure, a little bit of Mexico, a little bit of Brazil. You see what's going on here. Nearly 90% exposure to airlines, airport services, the rest, a little bit of aerospace and defense. So it's this is a real pure airline play. You can see the constituents here, guys. American Airlines, Southwest, Delta, United, SkyWest. You see them. So this is really a broad play for airlines. So what the advantage of trading something like this, and the disadvantages, let's talk about this. Reasonably liquid as well. Did we look at how much was traded every day? Let's see. So hefty volume done every day. That's probably picked up recently, but there you go. There's plenty to be going on with that. Similar chart, but you can see, interestingly, as it's more weighted towards airlines, a much weaker chart than some of the others, which has started to climb back a lot more. Okay, but some of the advantages we've got with trading this is that we have a broad split over multiple airlines. We don't have to buy individual stocks. We can buy this ETF, and it's giving us the split over those airlines, as we saw here, and giving us that constant exposure. The downside is, which also means that if one of them goes bust, for example, as long as it's not a big heavy weighting, which none will look them too much here, then it's going to have a limited impact on the ETF. 10% impact, of course, if it's got 10% weighting. So if one of them goes, of course, the others will be impacted from an airline going bust, obviously, but it's not as if you're going naked long on one and it goes bust. And same if you're deciding to short these ETFs. If you can short them, it's something that gives you a broader risk perspective rather than just shorting one or the other. The downside, of course, is if you're holding these for long term, expense ratio can really be grinding and take a lot of the gains away from you. It depends how big the expense ratio is as well. If it's not too bad, then it does the job. But for a kind of multi-day trade, multi-week trade, multi-month trade, then these are some of the things to consider. So we've got Jets, JETS, got XTN, FTXR, and IYT. Those were some ETFs that have exposure to the airlines. If you're considering short or long, then they might be something to consider as an alternative to going naked long or short individual airlines. Anyway, guys, take care, keep the risk manager. Whatever you're trading, make sure you understand the product you're trading as well. Don't forget to check out our channel sponsor. There's a link to them in the description below. Take care, guys. Bye-bye.